Hello, everyone. I think we should start now. We are already quite late because people were coming quite late. I can see familiar faces, Pumza, Noxi, Pumla. Hello, everyone. Esther, hello. Hello, Tulsile, hello. Good to see you guys. Okay, maybe I should go on video myself. I generally shy away from the video. Hello, everyone. It's so good to see you guys. I'm so glad you're here. We've got quite, oh yes, Ndosi, hello, everyone from Cape Town. Okay, guys, we've got quite a lot to cover today. I guess it's because it's my favorite topic, finance, and there is no other way to do this than this way. So I will send you guys the presentation, but for now, we're just gonna go through some content. And as I'm going through it, I will also be instructing my team to just load things in. Hello, Roy, I see there are more people from Cape Town joining us. So yeah, okay, so guys, this is like really, really important. Because at the end of the day, if you really think about it, why we started our businesses was because we wanted to make more money, but we suck in it so bad that we end up screwing quite a lot of things because we just cannot make the money that we intended to actually make. So yeah, let's go through this and see how we're gonna go with it. There is so much content though, but don't stress too much. I'm gonna email you guys this content, and some of it, those who have attended Finance Success or a component of Finance Success will actually honestly be using it for this. So I'm gonna just start with a normal thing, introduction to myself. I don't even feel like I need to introduce myself anymore because most of you, if not all of you, have actually attended one of our programs in one way or the other. So if you're new, please go to Mvulane, preciousmvulane.com. That's my personal website, and then you'll see whatever that you want to see there. And what I have done. And welcome if you're new. We really appreciate you taking an opportunity to build yourself up and understanding that the more you grow, the better you will actually face the challenges that you have in your business, and also the best way you can actually build up yourself. So let me also share this so that you guys can. Okay, guys, so as I was saying, I kind of feel I shouldn't be introducing myself. So anyone who needs more information about me, please just go to preciousmvulane.com, and then you learn more and understand where I am, what I stand for. Here's GAD products and services that we have created. We have both consulting and also we have specific product relating to that. We are actually running some of the programs now with a private fund. So those who are interested to actually join other programs that we're running, Bonolo and Denise they're gonna post a link for you so that you can be able to go through. So so what are we covering here today? We are covering business administration. This is a series. This is the third session we're having under business administration. We have done human resources. We also have done office administration. And now today we're doing finance. This still falls under business administration because we said business administration is when you're doing activities, irrespective of the size, of the business, you will always do. And this is what we also call corporate services. And that is what business administration is about. If you have missed any of those previous sessions before, don't stress too much about that. We will be also including the link of business administration session that we had, including the manual, that the guide that we actually shared afterwards. We are going to rerun the office administration because that day we were testing another software on webinar, which didn't go so well. So the recording is not on YouTube, but the content and the material has been made available. We will rerun it again just for those who had actually missed or wanted to listen to it again. Please note the way we have structured this in terms of business administration, business development, and operation. We have already explained it, as I said on the previous. We have tested this for actually startup businesses in different industries between 2 to 50 employees. So we are now starting to scale it up to see how it can actually work even on organizations that are above 50 employees. So if you have more than 50 employees, talk to me before you finalize the organogram, because this is all that it is. It's basically telling us how on the organogram we should actually be structuring to build a business that is agile, but where you are not wasting your resources. So as of today, again, guys, you know the ground rules. You need to mute yourself. And if you want to have a video running, no problem, have a video running. But remember, video takes more data from your side, but it also puts a pressure on you, on the app. So maybe also consider just not having a video, only just having and then have a video of looking at what I'm doing. But we are also live on Facebook. So those who are on Facebook watching this and going through this, please go ahead and let us know, send us your details on the chat and also on a Facebook Messenger so that we can email you the slides. Okay, guys, let's start. What is finance? Finance is actually just a science. It's a science that helps us to manage and understand how money, banking, credit, investments, and debt actually work. It's generally distinguished or created as there's something which we call it public finance, corporate finance, and also personal finance. But how you call it doesn't really matter. Finance affects quite a lot of things in our lives because it relates to money, it relates to how we manage the assets we have, and the principle of finance are the same whether you are running a big business or a small business, or even you're running a government institution. So within finance, we have to also understand the issues that are relating to microeconomics. So what do I mean? So in this space, we have to understand matters and issues relating to finance on how certain things affect our businesses. And you will do that analysis when you are doing your PESTEL to say, how does the public finance, i.e. Tito Mboweni, the Minister of Finance, fiscal decision affect my finances? How does the government respond to challenges that maybe the country or the world would be facing, which could be relating to trade? Right now we're faced the health risk, which in this case is COVID. And even that you need to ask yourself, based on what the government is responding, how do that affect my business? Is it helping me, or is it making me to actually spend more money? So finance, as I said, is just a science. It describes the management and the creation and the study of money. Now, within finance, as I said earlier, we have corporate finance. In corporate finance, we basically are dealing with three things: how we actually raise the money to finance a specific asset, and how we measure the return on investment to make sure that we maximize the shareholders' value or the shareholders' investment or the shareholders' asset. Because at the end of the day, when you started your business, you started as a shareholder, you are fond of your business. So which means you have invested some sort of resources within your business. And therefore we are a shareholder. Because you're a shareholder, you should be paid your dividends. There must be a return on investment on what you are actually have invested. So corporate finance is about basically those three decisions. But within corporate finance, we then have financial management. Within financial management, we are now managing those decisions that we have made in corporate finance, which are relating to what? Investment, financing, plus also return on investment. And financial management is about the day-to-day running of the business, is when we are basically improving and building up controls, weaknesses, conducting specific activities which are relating to planning, execution, and also reporting and monitoring. So that is basically financial management. Within financial management, we then have accounting. How does accounting relate to financial management? You see, in financial management, we are managing decisions, whereas in accounting, we are recording the transactions. And those are two different processes and systems. So in accounting, we are recording, we are summarizing the transaction and the decisions and the activities that we have done. Whereas in financial management, we are actually executing the decisions and activities. And again, within accounting, we actually have to do reporting of these economic activities according to specific frameworks. And I generally call this, in accounting, we have four sisters. Sister number one is financial accountant. Sister number two, tax accountant. Financial accountant and tax accountant are different. Even though they are sisters, they look at things different. The financial accountant uses standards, whereas the tax accountant uses tax and the legislation. And then we also have the last two, which is cost accounting and management accountants. And I generally advise entrepreneurs, when you're appointing people that are going to support, which we are also going to cover just here below, appoint someone who's going to help you to achieve both financial accounting plus also tax accounting, because the cost of not doing those two right is so high. Then you can then start building up on the cost accounting and also on management accounting, which I will take you through some of those principles here. Guys, as I'm going through, please send through your question on the chat. Let me know if maybe you're getting lost by doing, as I'm going through each page, I will then also look through your comments. I see that there are people who have comments. Let me know if my team will let me know if I actually need to stop and answer those. I will not, though, be dealing with administration issues like you not accessing your content, or you are struggling with the video or whatever. So I will not deal with those. Okay, the last bit within finance is what we call bookkeeping. Bookkeeping is it's a recording system that is used by accountants, which is called double entry. They will talk about things like debits and credits. They will talk about that whatever that you put on the left side, it should always be on your right side. That we always say things like the books have to balance. That is what we basically are calling bookkeeping. As an entrepreneur, you do not operate at the bookkeeping level. You do not also operate at accounting level. You operate on finance, corporate finance, and financial management because you are a direct. You should not worry yourself about accounting. You should find a person who's going to assist you and help you to manage the accounting. The bookkeeping, same thing, because you are not trained to be an accountant. There are people who are trained to actually be there. But what you need to do is to set up systems and processes under financial management activities to enable you to be able to do what? Manage it. Your main
Hi,
goodness, guys, can you please make sure everyone is muted. Okay. So you should always make sure that you understand where you operate. You only operate on finance, corporate finance, and financial management. And I also want to tell you that one of the reasons why we as entrepreneurs struggle with this world of finance is because we don't know what are the economic factors that affect us and how we should respond to them. You see, at this level on finance in general, as I said earlier, you must understand what is the public finance, the fiscal policies that the government is taking. And how does South African Reserve Bank, which is a monetary police, respond to that? And how do you, as a small business, should be looking at those factors so that you can then be able to make a well-informed decision in corporate finance and also in financial management. I'm going to stop here for now and go to the chat and have a look if there are any comments relating to what I've just discussed now. Okay. Okay. Gladys from Zimbabwe. Hi, Gladys. Okay, we will definitely take your details, guys. Those who are posting their email address. Hello, everyone. Denise and Bunolo will actually do that. Guys, I don't see any questions. Did you understand what I'm talking about when I am saying finance? You have to understand it in terms of economics. But from that perspective of economics, i.e. when you're looking at the fiscal, the monetary policies and the response by the government and different institutions within and regulators, how does that work? Because all that will also relate into how you should build up your business. Hi, Paula. Hi, Game. I can see.
Hi, how are you?
Good, Mama. How are you? So good to see you.
Good to reconnect. Yeah.
Great. I'm looking at the questions. Okay. Perfect. Okay. So Gladys is saying that, Precious, I understand and follow this stuff. Can a small business afford to have an accountant and bookkeeper? Yes. They can afford to have an accountant and a bookkeeper by reducing the activities that the accountant does. So that, what does that mean? It means you as an entrepreneur, you need to record 4 transactions. Transaction number 1 is your income. How much money have I made? Number 2, how much money have I spent? Number 3, how much assets do I have in my business? And number 4, what are the debts that I am currently having in my business? And these debts, can I actually have a clear summary, an executive summary of which line items is for? And guys, those are the only 4 things. So that where every month or once a year, you get an accountant who's then gonna make sure that they summarize the financial statements according to what? The standards that are there. You have to reduce the cost of having an accountant by you managing and running your finances like a very close lead, i.e. monitoring your expenses every month. Because the challenge that we face as accountants, you call us and say, Precious, come and do the books. And we go in, there's no books. That's a challenge. There's no books. And one of the reasons there's no books is because entrepreneurs struggle to keep track of their expenses. They struggle to keep track of the money that has come to their businesses. To then be able to understand that that world of finance will influence 4 things. That's your income, your expenses, your asset, and debt, which is your liabilities. Those are 4 things. You have to understand that we will. So as I said earlier, you have those 4 things. The income and expenses, that is what we call income statement. That is where the business performance, the financial performance actually happen, where you generate income that must be above your expenses. So the only way you can increase your income is either increasing the units you sell or increasing the price, or you can do both. That is how you will increase your income. How you will reduce the spend, which is your expenses, is to actually have a clear procurement strategy, but also plan your expenditure. The reason why people struggle to manage their expenses, or they end up spending more than what they actually earn, is because they don't plan their expenditure. When there is money, they then buy and pay. And when there is no money, then everything is dry. So you have to keep in mind that to manage and reduce your expenditure, it must be influenced by a clear procurement strategy and a plan. And the plan, guys, on expenditure is what we call the budget. Now, on assets, which is the other side, which is asset and debt, which is now the balance sheet, which is what we call a financial position. We need to make sure that we again keep the assets higher than the debt, so that will then increase your net worth. The more you increase that, it will then increase the value of the business. So the only way you can build a sustainable business is to make sure that the top part of your expenditures, which is of your income and asset, is kept high, and the bottom part, which is your expenditure and the debt, should be kept low. Remember, asset is what you own, debt is what you owe, whereas income is what you have generated or earned, whereas the money that you have spent is what we call expenses. Remember also that at the end of what are those 4 elements, all those 4 elements they are basically doing, they are categorizing your decision making. So you can't then, when you look at your financial statements and say, oh, the accountant did their own thing. No, they did their own thing based on information you've provided, because the information you've provided is actually articulating the decisions you have made. What you need to understand is that finance and money in your business is just the result. It's the result of the decisions you have taken. It's the result of the things you have done, nothing else. Okay, so I'm gonna continue and I will then cover, and again, guys, if there's any question, I'm gonna check now if there's any questions that you guys have. Okay, there are no questions yet. Oh, Pumza was saying, she understands that F&B has an accounting tool for its business. Has anyone used it? A perfect question, yes. The F&B has an accounting system that is actually recording the transactions that are happening on your bank account. Pumza, is not the best way of managing your books. What you need to understand, when the transactions are going through your bank account, it's at the payment basis, or should I say a cash basis. Your books, your accounting records must be recorded at accrual. Accrual means when the transaction does take place. Let me allow you to speak, Pumza, so that if you have a follow-up, you can actually be able to talk. Pumza, I'm looking for you now. Get ready to speak, because I want to just make sure that you understand. Hi. Hi, Sisi, how are you?
I'm good, and you?
Great. So what I am saying, Pumza, is that accounting system is good, but the challenge with the accounting system that is linked to your bank account, it's only bringing in when you are paying. It's not, it doesn't actually, you need to use it to record also the invoices when you are issuing the invoices to the customers. And also when you are receiving invoices from suppliers, but you have not effected the payment yet.
Okay, so when my accountant then is doing my books, wouldn't they use that document which I would get from the bank, or you saying the document needs to also have the accruals?
Yes, I am saying to you that you need to use a system that allows you to record the accruals. Because the accruals basically happens like this. Let's just say me and you are getting into business. Pumza, what do you do?
I'm in HR.
Perfect. I'm sourcing an HR services from you. And you then send me a service level agreement. We agree, I sign up. In that
Yes.
service level agreement, you say, Precious, here's a project plan, and you invoice me. And on your terms and payment, you say, Precious, my terms and conditions are 30 days.
Yes.
On my books and your books, when you issue me the invoice, you should be recording the sales in your books. In my books, I also should be recording the invoice that I have as a purchases because I've bought something from you. And what I am saying, the F&B accounting system tool, people are only using it just to draw the information that is on the bank statement. It does not actually make sure that you are recording your sales and also your purchases. So use the system to do your purchases like I'm explaining, but also make sure you are recording your sales. And at the end of the month, you should be able to say, Precious, here is your statement. Now I should be able to say, let me do a reconciliation. Let me check. Because when you send me the statement, now I need to reconcile on my book that, yes, I owe you 30,000 maybe for developing HR policies and procedures. Does that make sense?
Yes, no, I hear you, Sissy. Thank you.
Perfect, thank you. Okay, so Roy is saying, okay, I'm gonna unmute you, Gemanje, Pumza. Okay, Roy is saying most business fail as a lack of financial management, not having a solid business plan with financial projection. That is so true, Roy. I think it's because people do not necessarily understand that financial management activities need to be planned, needs to be monitored. They then just think things are just going to happen haphazardly. And then people start having problems like, I have a cash flow problem, I'm not making enough money, I'm having more expenses. But it's because you are not budgeting. It's because you are not planning. So what do I mean? Those who have been in my training, they will know what I mean. It's almost like I'm saying, you have expenses that you have to incur, that you have to you have things that you have to buy. But the way you're buying random from random suppliers, and you're buying random things. You don't plan your purchasing. So when you're not planning the purchasing, today utenga ka macro, kusasa or Pick and Pay, the other day is Spar. When are you going to create a relationship? When are you going to create a credit with your suppliers? And that is why then as entrepreneurs, we actually do not have a debt that is leveraged. Our assets are not leveraged properly because we do not plan our procurement. You see, when you plan your procurement, you know that even if Pick and Pay this month maybe has a special and maybe Macro does not have a special, but because you have a relationship with Macro, you will still buy from Macro because Macro is going to give you 30 days. The cost of buying with cash is exactly that. You're not going to leverage your credit. You're not going to leverage your asset. But in addition to that, because you have not planned your procurement, you then end up having a problem with cash flow. Sooner or later, where you're spending more money than the money that you are receiving. So you really need, and other people also, one of the reasons why they will not have financial projections is because they don't even plan their main activities of what they're going to do and when are they going to do it. Because that's all financial projection is. It's saying, on sales, we're going to make this type of sales around this time, and in expenses, we're going to spend this much at this time, and that's it. And people cannot do that because they don't plan their activities. They let the whole world decide on how they should respond into issues and activities. Okay, guys, I'm looking through on other comments. So Precious, can you teach us the very basic that entrepreneur needs to do around finance? Lots of startups start because of my address. Okay, so Hlanganiso, the basics is exactly what I'm teaching you now. The basics is to first understand that finance is not accounting, and accounting is not bookkeeping, and financial management is not corporate finance. You have to have that understanding, and to have also that understanding in terms of economics. How does economics actually work? And maybe, Hlanganiso, if you want maybe to ask a question, if you feel maybe the stuff that I've introduced are not at the really basic level that you are asking, maybe let me allow you to do a follow-up on your question so that I can be able to explain it in more detail. I'm going to allow you to speak, Hlanganiso. Hello, Hlanganiso, can you hear me? I am allowing you to speak. Will you please unmute yourself? Okay, Hlanganiso. Okay, Hlanganiso, I'm unable to mute him, but it's not a problem. I'm gonna actually, hi Hlanganiso. Okay, he has, I have unmuted him. I think he has got disconnected or something. I need him to ask the question so that he then say what is, because guys, there is no basic. What I've just shown you now, when I was talking about the basic of financial statement, that is financial statement, that's a basic. Those 4 elements in finance, that is the basic. Yes, you will build up to say income statement, comprehend, and add all the complexity, but at the basic level, you only need to worry about those 4 elements. I'm gonna also just see if our friend who had come to our things is actually on again on our screens. Let's see. So this is what I'm talking about. At the basic element, this 4 element, this side will be income statement and this side will be a balance sheet. And that, guys, is so important because a balance sheet tells you the positioning, whereas the income statement tells you the performance. And guys, if you can manage this every day of your life, you will never have an accountant who's gonna give you crappy work. The accountant was recording based on the information you have provided, but they don't run your business, you do. You're the one who have to make decisions around, do I need to increase my price or reduce my price? What influences that? Do I need to increase my units? Do I need to offer more products and services? Where do I need to reduce my expenses? No one is going to tell you that. You have to make that decision because that falls under financial management activities. Okay, I think our friend is gone. The one that was doing stuff in our presentation. Oh, okay. So Hlanganiso is saying, Precious, however, the financial management activities tend to take quite long. We need a quick and dirty but effective strategy. I think we as entrepreneurs, we have to maybe also sit back. Sit back in terms of understanding what is our role as directors. Being a director is being a manager. Being a director means you are being a manager. You can't stay away from managing things. You have to manage them. for things to run properly. The challenge that we have is that sometimes we tend to not to manage but do, and we mess up quite a bit. Last session we had on human resources was exactly about that. You need to employ people to be more sustainable, but you need to know what to manage. The financial management activities are not tedious. There is a lot of them that is true, but you can reduce by only doing the ones that are key. And I am saying to you, the ones that are key is knowing how much am I actually earning? How much am I spending? And how much do I own? And how much do I owe? Those are the 4 things you need to know and understand. Those are the only financial management activities that you need to manage. And if you manage those 4, I promise you guys, you're done. You are done. Pumza says, is there a guide on how much you should pay yourself as pesas? No, Pumza, there is no guide on how much you should pay yourself as a director or even as an employee of the business. The best guide we have provided, I don't remember, I think we had an article the other time, I'm gonna double check, Pumza. Please guys, follow our social media, some of the stuff we're posting there. What happens is that you need to decide. Remember, the shareholders appoints directors, and directors, they then appoint employees. You are the shareholder. You are the investor. You're the one who's gonna determine how much should the director be paid. You can pay anything you wanna pay yourself based on the role you play as a shareholder. I generally say to people, you have to understand that when you're paying yourself so much and maybe it doesn't justify, it must be justifiable by the value you bring into that business. It must be aligned to the value of that business that you are bringing. If you're saying, I want 100,000 a month, which means in that business, you must be at least be bringing more than 250,000 per month to justify paying yourself 100,000. Why? Because the 150,000 is therefore then paying for other expenses. And remember that 100,000, the 1.2 million then is gonna need to be under your own personal taxes to actually now be paying. Obviously, because your business will be the employer, there will be some sort of deductions and stuff. And guys, let me also just, we have already covered this on compliance. Those who were not part of it, please make sure that you share your email where you need additional support on those, and also the link. Team, guys, please put the link for as an employer from the YouTube and let us know if you need additional support from Pumza. Okay, Tabis is saying the challenge is to maintain the cash flow to be able to meet the short-term obligation. Okay, you see again, Tabis, e-cash flow problem is not the problem. What is the problem is that you are paying before you are receiving the money. Cash flow problem is caused by you not meeting your terms and conditions between yourself as a business, i.e., the arrangement that Pumza and myself were talking about. If Pumza, after she has sold me the terms and conditions, she then now goes and buy certain things to produce the work. She is paying to buy first before she gets the money from you. That's what causes the cash flow. You are not matching your terms and conditions between yourself and the supply, and the suppliers. And guys, I don't know how to explain it more simpler way. There is there is a video that I did. Please go on that YouTube account where I spoke about the cash flow. Bonolo, please include that, where I was explaining that the cash flow is a problem of not matching your terms and conditions between your suppliers and also your customers. What you should be doing is that if your customers are paying for credit, you should also be buying for credit. That's a matching principle. If the aim at all times is always try to make sure that you get the money first. You don't buy, you get paid first before you buy. You need to get paid first before you buy. And that will then solve your cash flow problem. But that cash flow problem is also influenced because you have no procurement strategy. As I said earlier, today, utenga macro kusasa, Pick and Pay, another day somebody else. Remember what is credit, guys. Credit is trust. Credit is trust, is the relationship that you have built with your suppliers. And the reason why suppliers are not giving you those terms and conditions is because you have not created a relationship and you have not created a rapport with your suppliers so that they can give you the goods for you to do the stuff, then your customers pay you, then you pay them. That's the problem. So Esther is asking, how much do you invest in the business in terms of time and money? How are you gonna pay yourself? Okay, so how much do you invest in a business in terms of time and money? How are you gonna pay yourself? I guess it's important to understand that first you have to understand that the time and money that you are putting into your business cost money. There's an opportunity cost relating to that. But as you build up your business, if you don't know your worth as an entrepreneur yourself, you will also then don't know how much does it really cost to actually do what you're doing in your business. As I said earlier, oh, our friend is back. As I said earlier, as you're building up your business, there are certain things that you need to do. You do certain things as a shareholder, you're doing certain things as a director, and you do certain things as what? As an employee. The stuff that you are doing as a shareholder, we call that the shareholder's equity. That's a contribution, right? And you have to book that into the books. The stuff that you are doing as a director, that is being a manager. You're gonna need to ask yourself, this thing that I'm doing, is it directly linked to me producing an invoice to a customer? Because if the answer is yes, then that should be covered by your salary as a director. But if the answer is no, that should then be part of the things that you are doing and building in terms of asset. That is what you call it a knowledge. That is what we call it intellectual property. That is what we also call systems and processes. You don't need to recover that. You are booking it in onto your books, and that you can do it as a fee. So you can have different structure of a salary that you set up, from salary to a fee, and also obviously as a shareholder as a dividend. So you have to understand, and that is why it has to relate to the role that you play. It has to relate to the activities that you are doing in your business. But you have to separate those three roles. Right now, as I'm teaching, as I'm training now on this platform, I'm operating as an employee in my business. Yet, earlier when I'm developing things, when I'm doing other things, I'm actually a director. I'm an employee, I'm a director who's working through processes and system and management. But maybe in another day, when maybe I'm buying a software, that's a contribution as a shareholder. I hope that makes a difference. That makes, Sis Eunice, hello Sis Yo. So guys, we have one of the best experts in the country. She was an F&B, a consumer education specialist in teaching financial literacy. She's saying, Precious, another major problem with cash flow issues stem from personal finance management. We don't manage our finances personal. So when it comes to do business, we just make things worse. That is so true. We do not separate our personal finances and also business finances. I mean, you will see cash withdrawals and a pick and pay transaction in a business account. Those are the things that we're picking up. People mixing up both their personal finances and also mixing up what? Their business. In the bank account of the business, there is cash withdrawal and the pick and pay, no clicks, you know. Those are the things that we have seen, Sis Eunice. Can you share also, Sis Eunice, your experiences? I'm just gonna allow you to speak also. I don't know if you can. Sis Eunice, please come through if you can. Sis Eunice is also one of our facilitators on consumer education. Sisi, go ahead, please share your experiences. Thank you so much for coming through today.
Hi, Precious, and hi, everybody. Sorry, I'm not seated at the best position, but I think I'm audible enough.
Yes, yeah.
Thank you. My biggest pain when it comes to running a business, particularly SMMEs, it's this factor exactly that I've raised, that as individuals, most of us, we are not quite disciplined in our personal financial management. It doesn't matter how much you have or how little you have. It does not matter how little or educated you are. The fact is knowing the financial principles and being disciplined with the little or however much it is that you have. Now, at this level that we are at as entrepreneurs, if I haven't mastered and I still am battling with my personal financial issues or management, it's going to just be compounded. The problem is going to be compounded with the business. Like you just said, Precious, you'll find transactions for salt and bread in one account, and then there's a transaction for a plumber, and then so most small and medium entrepreneurs manage their finances from one account. That is going to kill your business. You need to have two separate accounts, like Precious just said. Today, she's an employee, but on other days, she could be the head, she could be the CEO. So in your business, you are the CEO, but you can also choose to become an employee if you want to, or you can remove yourself. You need to pay yourself monthly. Have a separate personal account that you pay yourself into. That's where toothpaste and salt and water and lights and everything else of the household or personal needs will come from. And then have a separate account for the business. That's where you run your business's finances, and that's how you are able to see your growth. I think I'll leave it right there for now.
No problem, sis. Thank you so much for coming through. Guys, I hope you understand. It's about the principle. When you start separating your business finances, it's also you really taking yourself serious. Because think about it. At the end of the day, the business is separate from you. I think one of the biggest challenges we have as entrepreneurs, we are not separating ourselves from the business. We take the business as though it's actually, there is no distinction between the shareholder and the company and also ourselves. I just want to cover something. I want to show you something. Hang on 1 second. I want to show you this. We were teaching this on compliance the other day. And I wanted to show, can you see this, guys? Please just tap yes, yes, yes on there so that I make sure that you can see this. Guys, this is you as a director, and this is you as a shareholder. These two people are not in the legal sense of the word. You are separate. You are not the same person. In most cases, the challenge is because you are the same. There's no accountability. But this is a legal entity on its own. This can sue this can sue that can sue this, that can sue this, because these are separate legal entities. Until such time you have separated those in your mind, we shall forever have this problem where both income of the business is integrated with the director and also the shareholder, because you are not managing this. You see, as a director, you are paid according to your salary because you are also an employee. You are a manager as a director. So you focus on financial management activities. But those activities are related to the business. You are a manager. By the way, maybe some of you should fire yourself as directors and only just remain as investors, because you suck on it so bad that honestly, we shouldn't be allowed to be directors at this pace. I hope you guys are you are with me here. Did you see that? I need you to start really thinking very hard as to if I had, think about it this way. If maybe, for example, you decided, you know what, I want to start this business. And every day as you are investing in this business, you had a little diary of yours. You have a tiny little diary like mine, where every day you are listing down what you have done. And all these activities that you are doing, ask yourself, if I had done the same value, or I've invested the same value of time and resources into that business, what will have been my return on investment? Because the point is, if you keep on investing on this business and there's no return on investment, you shouldn't be doing it. You are not good at it. You shouldn't be doing it. You should always do things which you get a return on. You should always be doing the things that you should always get a return. You shouldn't do something which there is no return. It's almost like we are doing whatever that you are doing for nothing. And you shouldn't be doing that. So how do you build yourself, though, to be the right director? You start by separating the roles. You start by making sure that you account for your time. One of the things that entrepreneurs don't do, they don't account for the time and the value they have invested into the business. When it comes to evaluating the business and you're being asked, how much is your business worth? 5 million. But that 5 million is not on the books. It's not on your shareholders' contribution. It's not on your shareholders' loan account. This morning, I was going through my accounts with my accountant, and I was saying, no, that loan account it needs to be changed because there has been more contribution that I've made that needs to be booked on the books. Because when I'm developing new products, new services, that goes in as an intellectual property. We even trademark it in our business so that it can get booked as an asset. But when we are now servicing, like now we're providing a service and you guys are saying, Precious, where can we get the book? Now those are the sales. But the asset was done long time ago and is sitting in where? In the balance sheet as an asset, because the asset produces income. And the income is actually earned through spending more money so that you can make more money in your business. Right, guys? Oh, someone is saying I'm reminding them of the training I did in Cape Town. No, it changes life. Oh, thank you so much, Ndosi. Thank you. Okay, guys. Let's continue, and please ask the question, put through your notes. I am gonna go at your pace here. I don't wanna just shove content and then you don't understand the principle. I'm honestly saying to you, the cash flow problem is the result of you not planning your expenditure. It's the result of you not necessarily understanding your activities that you have to run. Some of you don't even know your top 5 expenses. So if you don't know your top 5 expenses, how are you gonna know which supplier you're actually gonna be using? See, that's the point here. Because from that, you can then build up a system of saying, okay, I need to start working with these top 5 suppliers who are gonna help me to actually create a relationship. And there's back doors. We discussed that in some of the training, the back doors of getting in to be trusted by people who may not know you and create a rapport. Okay, guys, I'm gonna look at the questions. Guys, Lorna, hi. everyone, guys, please put through your questions and your comments. And if you need personal finance management, Eunice is here, guys. We can organize a webinar just for Eunice to sort out your finances, your personal finances. Okay. Gladys is saying, what is the process for intellectual property for small business? Okay, so Gladys from Zim, it depends on how you yourself deal with it in your business. So in my business, I have 3 processes. I have research and development, which get expense to the books. When I'm researching about things, spending more time looking at what works, what doesn't work, that get immediately expense. But once the research is done, I then have a product development process. And the only way I kick in a product development process is when I know there is a demand. I'm certain that there is actually a demand. So when I know there is a demand, then I kickstart a process where it's now that what I'm building, whether it's a service or a product, I'm then now building as a product development. And again, it will go through a specific process. One of the process will be, do we need to do a ISB number for that? Is it gonna be maybe a pennant? Is it gonna be a framework? Whatever that is, to solidify it, to make sure that it is actually a product that can stand on its own. I also do a testing. Previously, when I was running business administration, I was doing testing. It was still under me now starting to test the market on what will be the demand of the product that I'm offering. So once I'm sure that the expense that I'm incurring is gonna be below the income I'm earning, it means I am ready then to capitalize the expenses to be going through my balance sheet as an asset. And I will generally notify my accountant to register the trademark or to register the ISB number, or in other instances, to register a logo of that product. And that is one of the things that I did with Strategy. So then the process of that, and then I launched the product online or whatever, and then it start running, and then people start buying. So that's the process that I follow. I think as entrepreneurs, we need to create a process of how do I actually initiate the solution, and from solution up to the time I'm offering, how will I assess whether to pull out or to get it? Again, each business is different. You can decide on your way to actually build it. But Gladys, that is how I do it in my business. Pumza, I've got a question. How do you separate being a director and a shareholder when you are the only person in the company? So Pumza, the way you separate it is very easy, my friend. You look at it and say, as a shareholder, how much am I willing to invest in this business? At GAD, at this point, I'm willing to invest at least 2.5 million. But I want GAD Consulting to give me at least 5 million from that amount that I'm investing in it. And that amount that I'm investing in, I am also contributing to it. So how do I contribute as a shareholder into my business? I contribute by putting resources, and in my case, the resources that I'm putting is my skill. That's all. It's my skill. And then I then raise the loan account, and then also raise the assets. So as soon as GAD is able to have maybe more assets that generate more revenue, I will then reduce my loan account by taking the money from the bank account and transfer it into a shareholder to reduce my loan account. So I think the first thing you have to do, Pums, is to be very clear what are the roles and responsibility of the shareholder and what are the roles and responsibility of a director. When you know what are those roles, you then start planning, when do I execute the roles as a shareholder? When do I execute my roles as a director? Even though you are one person, so that they are separate and you're structured even, and you have your own little checklist that you are using. where you're actually doing that. But you also have to keep in mind that even though in the legal environment, those are treated as separate, you should also be asking yourself, am I really getting the value from this business, the value that I'm asking for? Because at the end of the day, the point of being in business is to get a return on investment. Okay, guys, let's continue. I hope Pumza was able to answer your question. Now, so how do you start in your finances? You start by following these 7 steps in managing your finances. Those who have Essential Finance Handbook, congratulations, because then you exactly know where to start. Step 1 up to step 7. Guys, those who don't have step 1 up to step 7 on the book, please get the book on our link. Bonolo and Denise, please share the link on where to get the book. The book is very simple. The book is aligned to help you set and manage your goals, but also establish the structure, identify the obligations, which is your compliance, by the way, and also understand and apply financial concepts and understand and assign the key roles, and also design controls and system and evaluate your financial statements to see if you have managed to achieve your goal. And this goes round, guys. It goes around. It's a system that continuously actually move. So, and maybe you do this in the planning, step 1 and step 2 in the planning, and even step 3. But then afterwards, when you're starting executing, you do 4 up to actually 6 and 7, right? And execution, and also even in planning. I am not gonna go through the details of step 1 up to step 7, but in the presentation, guys, I actually have included in detail what does the book entails, and what are the ideas and tips and strategies and exercises that are there, and what are the templates that are available to you. And all these templates, you can also download them on the actual book, but you can also get the electronic copy on my website. I will request my team also to just double check to make sure that they are still there. There's also even additional reading and resources. Maybe also if I can allow people that have read the book to tell us what do they think. Guys, is anyone here who has the book, who has even read the book? Some other entrepreneurs, they buy the book, but they don't read it. I want the person who has read the book. Let's have a look on comments. Let me see, I'm going through comments. Anyone who has read the book? Okay. Okay, there is no one. Please make comments. I'm looking for those who have read the book. They can then tell the others on how have they found the book. Is it easy to read, but does it help you to actually build up? Someone is saying, every day I'm growing. I hope next year I must see dividends of my hard work. Thanks, Precious. Okay, thank you, guys. Guys, investments takes a long time. You should see your dividends at least minimum 5 to 10 years. That is when you are actually should be building up. Thanisa is saying, I'm learning so much from this session, Precious. You are great, much appreciated. Thank you so much for sharing. Okay, guys, those who have read the book, not the ones that bought it, those who have read the book, please put the comments on how did you find the book, because I'm not going to go through the full content, but I have included that on your material of what you're going to do. Esther, she's saying, I'm still taking step 1 at a time, as I want to do exactly what is written on the book. That is good, but it's very helpful. So guys, what is going to happen as you read step 1 or step 2, or even, guys, you don't even need to buy the book. Some of the content on the book, it's already on the blogs. If you just follow us on the blogs, sometimes we copy and paste what is on the book and put it on the blog. It's just that having a book helps you to track what is it that you are learning, so that you can add it in on your thinking, on your activities, because what you should be doing, you should be adding, you remember we shared the administration checklist, guys. Remember the administration checklist? We shared an administration checklist, office administration checklist for you guys, remember? Those who were on office administration checklist. I'm gonna open it now. I'm sharing now, I'm gonna share it just now. Give me a second, guys. Okay, someone is saying, okay, where is it? I'm opening it. We shared an administration checklist with you. Please include the link for that. So as you're going through this is not opening. As you're going through learning and understanding the finances and the principles, as you are learning, you should be updating your checklist. You should also be updating and scheduling it on your Outlook so that you send a reminder to yourself of what you need to do. Weekly, daily, monthly, quarterly, and even whatever time period you have to execute those activities. I'm trying to open the screen and it's not allowing me. Let's have a look again. Okay, I'm gonna just open up the office administration template. Okay, there we go. Perfect. So we had shared this with you guys, right? And I'm sharing it now and those who don't have this, just send a link. We will, Bonolo can send through the link here. You can download from the link that she will do, but you can also, can you guys see this? For JD, the financial activities are around these things only. Someone said, it was Hlanganiso who said, financial management activities are just tedious and it's too many. No, it's not. In my business, these are the financial activities that we do. We don't have daily activities, but we have weekly, monthly, and quarterly, and also annually. And by the way, these have already been assigned to a specific, so you can actually even insert a column here and then assign who's gonna do that. But maybe in your case, you are the only one. You just set this for yourself. All you need to do now is to copy and paste this into your Outlook and create it as task so that you send through a reminder, because sometimes when it's sitting on the Excel spreadsheet, you may not remember. But maybe in your business, you might have other activities that you want to do within your finance function. So again, this maybe will be a start for you. Okay, I hope you guys understand. Okay, but Jabulile Ulisengti, thank you so much for this, such worthwhile. It's very highly appreciated. No, thank you so much, guys. Okay, so I still have no one here who has, Ndosi, I know you bought the book. You actually even bought the book for other people. How far are you on the book? Roy, I know you bought the book. How far are you? Because you suppose as you're reading, actually, I even say to you guys as an instruction, don't go through the next page. Don't read for enjoyment. Read it for applying. Read it for implementation. And Dosi saying, ha, 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 I know you bought the book. I remember. Okay, guys, let me finish up and wind up so that if there's anyone who has questions can put. So Ndosi says, I applied a lot. Let me share. Please, you can speak, Ndosi. Tell us, Bonolo is gonna allow you to speak. What did you find to be helpful about the book? What were the things that maybe you didn't know? And by the way, Undos is one of the guys I met in Cape Town a pharmacist who's also a humanitarian who love helping people who's in the health sector. Please, Lucy, go ahead.
What happened with the book when I bought it? I must be honest, in the beginning I didn't read it because I learned quite a lot. But then I implemented the financial system, which means then I had to do a cash flow. You remember the cash flow problem I had? So I had to make a spreadsheet for my income to make sure my income statement was right. So that is one thing which I can say it helped me a lot. So when you were saying earlier, I was like seeing what you taught me in Cape Town. Unfortunately, I'm in my house, not dressed proper, that's why I can't be on video. Apologies for that. So what happens is then from there, I started implementing everything I learned in my business and what we learned in that course which we did with you. So another thing is then my cash flow started improving. I had to start another company which I'm about to launch very soon, which is very good. So then another which is there in the business, which I like the most is what I learned, especially in that book, is everything to do with business is inside there. When it comes to financials, there is nothing not there. So everything, if I miss something, I go back to the book, and then it teaches me that, and then I learn something from there. If I look, like I said, cash flow, I sorted out that, and then I sorted out also another very important thing that I'm a director. I registered for UIF. So in this COVID-19, it happened that I had to apply for COVID-19. I got paid.
Oh, wow.
So I learned also from that I'm a director in the system.
I am so proud.
So it was so nice to do that. So I did learn a lot. Like I said, it teaches. Now I know I can be an employee. Then I know I'm going to be a director, and then I can be also a shareholder. I've separated all of those three. So when you were teaching them about it, it reminded me this is exactly what I've done in the structure of my business. So I have a role now. I've even employed a manager recently to run my business so that I can focus on the marketing side and getting more business out. I comply on everything. Yeah. What's fun is the company is called African National Chicken. It's ANC. I was supposed to launch it last year. Now I'm going to launch it properly. And it's registered, everything, including even the CDS I've registered.
Wow.
This,
this is wonderful, Ndosi. This is
I'm already have a number. So everything is ready. So I'm going to start launching now very soon. Yeah.
perfect. So,
Yeah.
guys,
Thank you so much, man. Thanks for having me here. Thank you so much.
Thanks, Bob. Guys, Ndosi was one of the clients from the NEF. In NEF, I run training for NEF. So he was one, and then they actually bought the book. The book helps you to simplify your finances, but it also got lots of key controls that you need to pull and build up. Roy has also said an excellent book. It added tremendous value in my business as a business consultant. And again, guys, we have Roy. Roy prepares business plans for those who are saying, you know what, I'm struggling to figure out how to put all my ideas to be in a business plan. Roy can actually also help because we have a lot of support and systems that are there. I love also these days, you can actually get a consultant, a business consultant like Roy, to say, Roy, send me the questions you want me to complete, so that he then craft and help you to craft the business plan and the processes. Thank you so much, Roy, for that feedback. So guys, even if you don't have money to buy the book right now, follow us on GAD website, and also go to our page, Essential Finance Handbook. The team is gonna post that. We are posting blogs on weekly basis, but we're also sharing certain principles that we're teaching here, which will then actually be able to learn and understand over a period of time. Guys, remember, your teacher taught you 1, 2, 3, how many times? Almost 100 times before you got it, right? Almost 100 times before you actually really got it and understood what you were talking about. So same thing, the stuff, and that is why I love people like you and Ndosi. Every week we are on this training, even though some of the things are the things that I'm repeating from the NEF training, and you also have read the book and you're applying the book, because you must be hearing it over and over until it's part of you, until you're a real director. You know, you can go in with a board of directors and start building up, because our aim at GAD is to build you to be a director that one day you sell your business. One day your business can run without you. You don't need to actually have to wake up to run your business. Your business can run on its own. That is my aspiration for all of you guys as you are attending these workshops. Here's the checklist Bonolo have just shared. Please, guys, clickily use that to build up the things you need to do within the business administration. There is another comment here. Hlanganise said, I couldn't see the financial service spreadsheet you showed. Can you please copy so I can model one? I didn't share any spreadsheet, I'm not sure, but the checklist is here, Hlanganise. Okay, guys, are there any questions? If there's no question, let me continue then. I think our friend is gone, the one that was playing around our content. Okay. So, I just... Are there any questions? Are there any questions, guys? Please, if there's anything, if there's any, oh, thank you so much, Hlanganise. Guys, all these wonderful, beautiful comments you are leaving privately to me, please post them on the social media. Also share our content. We need to increase and enlarge the scope and our network. We want to help as many people as it humanly possible, but we cannot do that without you guys. We need you to share. When you are sharing on WhatsApps, we are sharing on the social media, we are emailing your stuff, email it to 3, 4 friends that you actually know are in business, so that we can start building the network of people that actually can build each other, because when my business grow, your business also grow, and other people's businesses also grow. Okay, so I'm gonna go through the rest of my content. It's so much content. So as I said, I'm not gonna go through the rest of the training content that I was talking about, the steps, because you can go through that on your own. Once you have gone through the 7 steps, you will then start understanding that. Let me share this so that. How do you actually formulate the finance strategy and the plan? What is a finance strategy, and how do you actually create one, and how do you execute it? Let me just share this. Guys, in the meanwhile, is anyone who has questions? Okay, there's no questions. Someone is saying, I can't see the screen. It's because I have not shared. I'm still putting through the content. Gladys, I have not shared yet. I am trying to share now, and it's still not featuring through. And I have no idea why it's not featuring through. Bunolo, will you please help me? Oh, there we go. Perfect, done. Okay, guys, so how do you formulate a finance strategy? Understand what is a finance strategy first. A finance strategy is about 3 decisions. The investing. Why are we actually gonna be investing our resources, i.e. capital, assets? And then how are we gonna finance that investment? That is funding now, raising the capital. And the last part of financing, finance strategy is return on that investment. How much should we be expecting from that investment? So what you need to understand is that the investment comes first, i.e. the asset comes first before funding. And some of you go to the market looking for funding. Hey, I've seen people running 2-3 years, going around the circle, looking for funding. And they can't find funding because there is no what? Asset. Because the asset determines the type of funding that is required, whether it's a debt or an equity, or is it a short-term or a long-term. Remember matching principle I spoke about when I was talking about cash flow on your terms and conditions. Matching principle applies across every decision, especially when it comes to finance, because which means then you're gonna need to match your funding model with your what? Your investment model. Okay. What influences the finance strategy? The goal, the destination. Remember, I said there's 7 steps. One of the 7 steps, the first one is what? Setting the goal. Your destination, where do you want to end up? What's your vision for your business? Number 2, what resources do you have? The investment, the asset. Please note, the investment or resources include both intellectual property, which is your skills, your experience, and your qualification. But also, do you have the right resources, and even in terms of money, to be able to actually reach where you want to go? Time. How much time you want to take to reach that goal? So time is also influenced by the resources and the destination. And the last one is the return. What are the returns that you should, what is the profit? With this return in mind, how does it get influenced by the time? Because returns is very tied up to the opportunity cost of not doing something. Right now, I'm running this training. I'm engaging with you. What is the opportunity cost of this? If I was running, if maybe I was preparing a board pack, how much will I have been paid versus what I am doing now? Because me doing what I'm doing means I had forgone something. That thing that I have forgone is what we call an opportunity cost. Just also remember that you have to select the key performance indicators that you will need to monitor and manage on quarterly, monthly, and weekly. And that depends on the nature of the business, but it also depends on what you have set up on your financial perspective in your corporate strategy. Some of you don't even have a corporate strategy. Again, we have a program. Have a look and start following the newsletter and subscribe in that, because we are actually having blogs that we are releasing on there where you can start understanding what we mean about corporate strategy or a business strategy. Basically, a strategy is a one-pager where you have your vision, your mission, and your targets, the things you want to do, and in terms of 4 perspective, which we call it a balanced scorecard. And these things that are here that are like circles, they are then measured using a key performance indicator that we have. Have a look at what we have on the simplified strategy. If you need support or you want to join one of our training, please let us know. Last week when we were doing business administration, we were focusing on organizational capacity. So today we're here on finance. So as I said, finance is measured by 4 things: income, expenditure, and the outcome of income and expenditure is what we call profit. So when you increase your income and you reduce your expenses, you increase your profits. And when you're decreasing your operating expenses, is the same as decreasing your total expenditures. Okay, guys, any questions, let me know. So I think because I've run out of time, it's now 4:30. We started at 4:10. I'm gonna end there, but the presentation that we have goes on up to page 31, where we also start breaking down the advantages of setting up the right business functions, the right finance functions, and we also are taking up also some of the things that are already articulated on the Essential Finance Handbook. But we're also articulating for you to be able to see how you will structure your activities within financial management, which will then help you to manage better. I'm gonna go to the chat and see if there's anyone who has questions. I'm so sorry I've taken way too much time than I normally do. please send through your questions. I am gonna email you guys this content to you, and I will also include some of the examples of key performance indicators that we have in finance. And again, key performance indicator relates to the destination. What have you set as the goal? So the goal then determines which KPI you can use. Guys, I'm gonna allow people to talk so that we can answer any questions here. Pumza is saying that it's a dangerous file, so which means there's a possibility. Okay, no problem. We will email you guys. We'll definitely email you the document to Pumza. Gladys, thank you so much for your time and everything. Oh, thank you so much, Gladys from Zimbabwe. Guys, Lorna, thank you so much for coming. I mean, I think it's your third week now. No problem. Thank you, Lorna, for coming through. We will email you the full material. Guys, just post in your questions. Finance is easy. What is difficult is our emotions around money. The day you learn to manage your emotions, that's the day you're going to learn to manage your purse. You need to start being a person who run your business like a machine with no emotions. Because if you're running way too much emotions, you're not going to let go when it's time to let go and move on. You're going to be holding on. You won't be able to delegate. You won't be able to actually allow people to take more responsibility. But by you creating this checklist, by you creating what needs to be done when, it allows you and free you, because now you can build a job description for someone and say, here are the things that you need to do. Thank you so much, guys. We really appreciate everything. Thank you. Thank you so much. I will send, if you guys have questions, post the questions, guys. Post the questions. We are here to help. There is so much work that we need to do, but that work is not going to be done until you guys start applying what we're teaching. Roy, thank you so much for attending. Next time, Roy, please share also your content in relation to the business plan, because some of the people are starting up, are reviewing their businesses. They need to come up with a business plan. Roy, do you want to say a few words? Tulsile, thank you, amazing. Oh, thank you so much. Thank you, guys. Thank you so much. Roy, do you want to share a few words on your work? Let's see. Oh, Stephanie, thank you, guys. Thank you, thank you, thank you. I will email you guys the stuff. Just remember, go to our social media, both Facebook, Twitter, even LinkedIn. We are posting things on a weekly basis there, and which is the content, and some of the content is coming straight from the book, and some of the content is the stuff that we're approaching new ways and how. So, and we will also even posting this. So send us your details. We will email you the weekly stuff. Next week, we're starting our trust. Those who have not enrolled for the trust training, which is funded, please join. Bonolo, please share the link for people to actually join. We are running the training. We're going to start by keeping the money. Remember, you earn the money, you keep the money, you raise the money. Eh? So we will be working on those things. And please let me know if you need any additional support. Bonolo, please share that link. We'll share it with everyone, where everyone, guys, you can join. It's free. It's actually, the session is free. It's being funded by a private funder. We're doing it through ECAS. So when you see ECAS Entrepreneurs, don't worry, it's one of our implementing agencies. So we will be running it for the next 4 weeks, I think 4 to 8 weeks, and it's gonna be, yeah, it's gonna be awesome. Roy, go ahead. Please tell us more about your products and services, but what are you willing to offer our entrepreneurs?
Hi, Precious. Thanks for your excellent presentation. I always enjoy it, and I always learn quite a lot from your presentation, which I do appreciate. What I do is I basically offer a consultancy service where I basically guide SMEs and young entrepreneurs in terms of business plans. because what I discovered is that business people normally do not have a business plan, and they don't actually measure their income and expenses via actual versus forecast. So what I do is basically I assist and interact with them to create an executive summary, looking at also the general company description, as well as the products and services they offer. And then I also assist them with their marketing plan, their marketing strategy. And also I come from a good procurement background. So I basically assist them in terms of procurement, how to rationalize and how to optimize their suppliers, as well as the financial plan. What's important is looking at the actual finances and also doing a 4-year projection in terms of the income statement, their balance sheet, and the cash flow statement, and what is their net worth. And that's basically how I help entrepreneurs to succeed in their businesses.
And guys, Roy was a banker, so he knows what he's talking about. You are also in property, Roy, right?
Yes, I do also sell property and rent property as well.
Oh, great. Let me know. I'm looking for stock. Okay. So again, guys, use this platform to network. I think next time, Roy, we'll have a session where we are talking about the business plan, because that allows the entrepreneur to actually see what activities does he intend to have. Because when he doesn't plan for the activities, then he's running his business randomly. Are you open for that, Roy?
Yes, definitely, Precious.
Perfect. Great. Thank you so much, guys. We will email you the full detail. Have a look at the link. Thank you so much for coming through today. Guys, goodbye. Thank you. See you next time. Bye. Thank you, Pumza. Bye, guys. I have shared my email address also there. Make sure when you send the email, guys, you CC Denise, because I don't check emails every day. So I'm quite bad with emails. So I'm gonna make sure if you need consulting, you schedule with Denise. And we can also maybe next time run a Q&A session where I don't have a content, but you guys come with questions. And that will also help. I think we should have that session. So this is Denise, who's actually is my executive assistant, and also my email. But as I said, I hardly check email, guys. I mean, I don't work with people's agenda. I work with my agenda. So, but still, it's here. And then make sure when you are sending, because maybe we can use this platform, use the info to collect all the questions, and then we have maybe another session where we are just going through questions, because I think sometimes people are not, they don't want to ask when it's like this. Okay, thank you so much, guys. Send through your questions and your comments, and also even areas where you're stuck at. Just let us know. We will guide you. If we don't know the answers, we never actually usually have answers. If we don't have answers, we'll find someone who has. Bye, everyone. Lots of love. Thank you.
Lots of love. Thank you.